is saying about this. It's maintained a buy rating on Crompton with a target price of 485, and that implies a 46% upside potential. Quite a substantial gain is being seen by Jefferies on that. Harsh, why are they saying that?
Well, they're assessing the Q4 numbers, Alex, and they're seeing strong traction. What they're starting off by saying is that the 2.0 strategy, which was announced at the end of FY24, seems to be working now. And they've broken it up quite nicely. Firstly, they're talking about how the stock has dipped 13%, which gives an opportunity to investors. The stock now trades at 32 times price to earnings, and it's at around a 12% discount to the 5-year average. And the last 5 years haven't been great, and that's why that kind of stands out for me. In terms of EBITDA margins, the number has come in at 12.8%, which is a 240 basis point expansion on a year-on-year basis. So you're seeing that strong expansion on EBITDA. FY25, the EBITDA is up 24% YOY. E-commerce is driving growth, especially in appliances. The electric consumer durables, which is the ECD business, is actually leading growth. Currently, the ECD sales grew around 11%, but EBIT grew 20%. So that's where some bit of profitability is coming from. The mix improvement with regard to lighting, the mix improvement is what is aiding margins as well as overall numbers. New launches in street, flood, industrial and indoor commercial. All of those are aiding the B2B lighting business as well. And in terms of Butterfly, which is the other vertical, you're seeing a turnaround there. Price hikes, cost optimization is driving up margins in Butterfly. Mixer, grinder, cooker, wet grinders, all of those have clocked double-digit growth. Sales to grow in mid-teens is what they're estimating. 14% sales growth is what they are penciling in for FY25 to 28 with regard to Butterfly. Company is also expected to foray in rooftop panels. This is around a 20 to 25,000 crore addressable market, so large market there. Therefore, they're estimating an EPS CAGR of 18%, FY25 to 28. The risk reward, therefore, looking favorable. They're valuing this at 40 times, which is a 10% premium to 5-year average. Unseasonal rains is one of the risks, but outside of that, demand slowdown, slower traction, and delay in Butterfly synergies, all of those could well be risks. So keep your eye out on this one.
Yeah, Butterfly Gandhimati, of course, is what is being referred to here. But I want to get Dharmesh's view on Crompton. Dharmesh, the numbers looked pretty decent. PAT growth of 22.5%, margin expansion as well. What do you make of the numbers, and would you be buying? Do you also see a 40+% upside?
Yeah, Alexi, Butterfly Gandhimati is, maybe the game changer for it, because last 5 years or even 7 years, the company was doing nothing. They were consistently losing market share to other players. And the other players have gone very strong with their dealer network, the type of push they are getting with their products is pretty strong for them. And in fact, if you look at the consumer point of view, it's just because of Butterfly Gandhimati, they have got this number. Otherwise, people are not any longer looking at Crompton leaves. So, but this can give a leash of life to it. It's more of a tactical play. Valuation wise, it has corrected quite a bit. And if they are able to do 14-15% kind of a number, definitely there can be some upside expected, seeing the type of price damage which has already happened. But it's more of a tactical play than more of a wealth creator or more of a fundamental investment play for 2-3 years. I think there are better options in the market which have grown far ahead of this company. So, to my mind, from a trading perspective, one can take a chance here for at least see one more quarter. Then a fair assessment can be taken on the consistency of this call. Otherwise, I would give it a skip.
All right.